Hello traders and welcome to another video review. Today is Wednesday the 8th of September 2021. Let's take a look at the Forex calendar in the middle of the week. So we got the gross domestic product data from Japan, and as you can see we beat the expectations for the second quarter because the data was at the level of 0.5% while the forecast was 0.3%. The same as the previous reading for the previous quarter, 0.3%. We got plenty of data from Japanese economy, so we will definitely take a look at some yen related pairs. During the London session we don't have too much again data to be published here, but we got interest rate decision today. Interest rate decision is from the Bank of Canada, the overnight rate. The market participants expect the overnight rate to be kept at the same level, 0.25%, and just with the overnight rate there is a Bank of Canada rate statement scheduled for release at 4 o'clock as well. We got IV Purchasing Managers Index scheduled for release at 4 o'clock as well. Those data are from Canada as well. And at 5 p.m. we got the Treasury Select Committee hearings. Very interesting thing from the UK. We got the Deputy Governor Ben Broadbent and David Ramsey. They will all give a speech in front of the committee. During the New York session we don't have too much of a data for today. You have the member of the FOMC John Williams to give a speech 7:10, and the Fed Beige Book scheduled for release at 8 p.m. So I think we should take a look at the highlight of today, which is the US dollar to the Canadian dollar pair. So even though today is of course the overnight rate, and the pair is the pairs that will be mostly affected is the US dollar to the Canadian dollar. So what do we have here? As you can see, we have a retracement towards 50% of the Fibonacci level 1.2480. We almost hit this one because the low is 1.2493, so it's 13 pip miss, but we have a nice bounce from this level towards the local technical resistance 1.2656, and despite the fact that we get out of this ascending channel, there is still a chance for this up move to be resumed. Of course, right now it's very important to see how the market will react on this technical resistance ahead of the overnight rate decision. So the market is positioning itself for a bounce. So the situation here is that most of the market participants think that the rate will be but will be kept intact, right? So there will be no change in the monetary policy by the Bank of Canada, which is why we have a slight bounce here. However, if there is any move from Bank of Canada in the form of the interest rate cut or interest rate hike, then of course we might have an increased volatility environment on this pair. It's hard to say what the market participants will do, because in that situation when interest rate has not been changed for many months, the market reaction initially might be misleading. So it's very important to keep an eye on the market behavior and to wait for the dust to settle, basically, before pulling the trigger for a trade. So please bear this in mind while following the interest rate decision of the Bank of Canada. Of course, we got this trend line here, and we got this 61% Fibonacci retracement 1.2369. So it's kind of hard to say how the market will react if the Bank of Canada will behave unexpectedly, but if everything is according to the plan, we should see another spike to the upside when people buying US dollar, selling the Canadian dollar. The other pair I would like to speak about is US dollar to the Japanese yen. As you can see, we are breaking higher. We are breaking higher out of this supposed triangle, right? So about this kind of a consolidation zone. Very interesting candlesticks here, very big green candle here towards the upper channel line. So as you can see, this channel line is now violated. We have a breakout, hit the next technical resistance. There's a plenty of technical resistance. It's like a wall of technical resistance here between the 110.41, 110.82. So this might cap the rally here. However, the momentum is above the level of 50. Right now it's 58 points, so it's okay to consider it as a bullish and positive and strong. So we have a momentum behind this move to the upside. If we break above the wall of the resistances towards 110 and 82, the next target is of course the key technical resistance 111.71. So far it looks good. Traders are buying US dollar, selling the Japanese yen, of course. So that's the current situation. Let's take a look at the British pound and Japanese yen, because we have a hearing in Britain, and we should say something about Japanese yen as well because of the data from Japan. So what do we have here? The first thing is that we have a nice bounce above the technical resistance 151.29, so that's broken. The other one 152.39 has not been cleared yet. We have this kind of a pullback and indecision in market participants where it's supposed to go. The market is already above the level of the 50. It's not a strong momentum, 55 points only. So only with the breakout above this trend line, that's the first one, that's the first assumption, only with the breakout above this trend line here, and above the 152.39 resistance, and of course above the key technical resistance 153.39, we can say that the bulls are back in town and they will push the prices higher. So right now this will be changed to the technical support, and of course we have the other technical supports, but those are at the end of this 4.88% correction. So right now it's worth to keep an eye on the current situation, because trendline resistance, horizontal resistance are always a kind of a hard obstacle for the bullish trend to continue. So we might have some kind of a consolidation or even deeper pullback towards the support before the bulls will attempt to break it and go towards 153.39. So interesting situation, indecision on the daily time frame chart. Definitely we should keep an eye on this pair. And the last but not least is the Bitcoin. The Bitcoin made very big candle down. Let me just take a look how big is that candle in terms of the price range. We had the new high 52,883, and right now we've made 18.5% of a down candle, which is definitely a new cycle. And it looks like this recent up move was the wave 5, as I thought before. But what is kind of surprising is that we have been playing with the Fibonacci retracement. As you can see here, that's 61% Fibonacci retracement in completely different way than so far we did so far. As you can see, 61% was 51,198. It was here. it was of course violated because the high was 52,873, but then the reaction was very, very, very strong. The 50% Fibonacci retracement is no longer needed, and next, let's say this one, technical support, is no longer needed as well. This will be the technical resistance. So that's the current level of interest on the Bitcoin. So let's just keep an eye on this. As you can see, our key technical support zone held the bearish pressure. But you know, if we break below this zone, then of course the outlook is immediately bearish. So right now we can just remove our previous corrections measures. They are no longer applicable for our analysis, and what we need is just the last one, 18.5% sell-off on the Bitcoin. We are already trading below the neutral levels, negative territory, 43 points, excuse me, and well, it looks like we might penetrate the lower levels, despite the fact that there is very long down shadow here on this daily time frame candlestick here on a Bitcoin. So please keep an eye, especially on this support level, because if this is violated, then we go way lower towards 36,520. So please keep an eye on that in the nearest future. It looks like this move here was just a retracement. Okay, it was just a retracement, despite the fact that 61% was hit, and then that was a kind of a false breakout above the 61% retracement. So that's how I see it right now. And we've been talking about this declining momentum here on the RSI. So I think all of this move was not that strong, especially the last wave up made on this kind of a momentum. It's definitely something wrong with this behavior, market behavior. So either the RSI is lying or the price is lying. It turns out the price was lying, was bluffing, as they say in poker, and we have this situation when the negative divergence has been resolved by 18.48% correction. So we wait for the test of the support, and then we will see what is going on with the Bitcoin. So that's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.